What if you could get a slice of the rent from a Manhattan office building, or own a piece of a luxury hotel, with just $100? A quiet revolution is happening in finance that's about to change how we own everything. It's called RWA, or Real-World Asset Tokenization. And it's on a path to becoming a massive market that most people haven't even heard of yet. Welcome to Generational Wealth, your pathway from knowledge to legacy. Quick disclaimer. I'm not a licensed financial advisor. This is for educational purposes only. Crypto is volatile. Never invest more than you can afford to lose. Do your own research. How massive? Financial heavyweights are throwing out some staggering numbers. Boston Consulting Group predicts a $16 trillion market by 2030, while Standard Chartered sees it hitting $30 trillion by 2034. This isn't a niche crypto experiment anymore. It's a monumental shift, and by the time you're done with this video, you'll know exactly how it works and why it's about to hit the mainstream. Let's be real. For most of us, the world of big-ticket investments feels completely out of reach. Buying a chunk of commercial real estate, a bar of gold, or a stake in a private credit fund? That takes a huge amount of cash and the right connections. These assets are also famously illiquid. If you own a building, you can't just sell a few bricks when you need some cash. Selling the whole thing can take months, even years, and involves an army of lawyers, brokers, and bankers who all want their cut. This old-school system has kept everyday people on the sidelines, concentrating wealth and opportunity in the hands of a select few. It's a world built on paper, handshakes, and backroom deals, and its time is finally up. So, what's the magic behind this change? It's a technology called tokenization. More specifically, the tokenization of real-world assets, or RWAs. At its core, tokenization is just the process of converting ownership rights of a real-world asset into a digital token on a blockchain. Think of it like this. You take a $20 million office building and turn it into 20,000 digital shares worth $1,000 each. Suddenly, what was once an impenetrable fortress of an asset is now divisible, accessible, and way easier to trade. This isn't just a cool idea, it's happening right now. The market for these tokenized assets has been quietly exploding, growing from around $8.6 billion to over $23 billion in the last couple of years. So, what makes this such a big deal? It really comes down to three game-changing benefits. First, fractional ownership. Like we just said, tokenization breaks down expensive assets into affordable, bite-sized pieces. This opens the door for anyone to own a fraction of an asset that was previously impossible to access. It's a huge shift from a world where you need millions to a world where you can start with just a few $100s. Second, unlocking liquidity. Traditional assets are trapped in slow, clunky, old-fashioned systems. With tokenization, you can trade these assets 24/7 on digital marketplaces, almost like stocks or crypto. This creates a liquid market for things that have never really had one, from real estate to fine art. That efficiency could free up trillions of dollars in capital that's currently locked away in these hard-to-sell assets. And third, institutional adoption. This isn't just some fringe crypto trend. The biggest names in finance are jumping in headfirst. Just look at BlackRock, the world's largest asset manager. They launched their own tokenized fund called BUIDL, and it shot up to over $2.8 billion in assets. When the most conservative players in finance start putting billions onto the blockchain, you know a major transition is happening. And this isn't just theoretical stuff. Tokenized US Treasuries are one of the hottest areas right now, with the market value soaring past $7 billion in mid-2025 as investors flock to get blockchain-based access to low-risk government debt. We're also seeing real estate projects get tokenized, letting investors buy shares in properties and collect rental income automatically through smart contracts. We're even seeing this happen with things like fine art, where the ownership of a multi-million-dollar Picasso was divided up, allowing collectors to own a digital piece of a masterpiece. Now, it's not a completely perfect picture. There are still some big hurdles to clear. Regulatory uncertainty is the main one, as governments are still figuring out how to write the rulebook for this new market. There are also security risks and the challenge of making sure the real-world asset is safely stored and audited. But progress is being made. New regulatory frameworks like Europe's MiCA legislation are starting to pave a clearer path for compliant tokenization to go mainstream. The fusion of real-world value and digital speed is without a doubt the next chapter for finance. If you want to stay ahead of the curve on transformative trends like this, make sure you subscribe and hit that notification bell. The tokenization of real-world assets is more than just a new piece of tech. It's a fundamental change in how things work. It's about making ownership more democratic, markets more efficient, and finance more transparent. While the market is still in its early days, the momentum is impossible to ignore. We're watching the start of a multi-trillion-dollar shift, where everything of value, from buildings to bonds, will eventually find its home on a blockchain. This isn't just the next big thing in crypto, it's the future of finance itself. This video was a suggestion by one of our contacts on LinkedIn. Let us know what you want us to cover in the investment space. Your suggestion may become our next video. If you learned anything from this video, make sure you like and subscribe to ensure you never miss a video. For more information, visit our website at generationalwealth.biz. We appreciate you watching. See you on the next one.